So what you're about to see is the exact trading strategy that I used just this morning to make around $1,000 across all my funded accounts combined. Now, I've been running this session liquidity model every single day for the past 3 years, and it's what took me from losing $50,000 trading while I was working a 9-to-5 job while being a student to pulling as much as $15,000 from a single trade, and then making $30,000 every single month, living the life that I always dreamed of. And today, I am going to be showing you the behind the scenes of the exact strategy I use to do it. So you can just copy me, skip the painful years of testing and strategies and blowing thousands of dollars. So hit that like button, subscribe to the channel, and let's dive right into it. Okay guys, look, I'm about to backtest this strategy and show y'all that the session liquidity model really works, and how I'm going to do it so you all can know that this is legit, this stuff works, and you can start applying it today, is that we're going to do it completely random. No guessing, none of that. Because when you're backtesting, it's easy to already be able to tell where price was going to go. And then it defeats the whole purpose of backtesting, because as I'm looking on the daily time frame right now, I can easily see that price was trending higher and then price started trending lower. So when I'm backtesting, it corrupts what I'm actually seeing and I'm cheating. So how we're going to do it, just so you all know the session liquidity model is legit, we're going to scrunch this up in backtesting on TradingView just like this. Now you can't tell whether price is going up, can't tell whether price is going down. I'm going to go like this to a random day. So we are in, I don't want to go too far out. Okay, we can do September 10th. Let's start it on a Monday. Start new. September 9th of 2024. Boom. Let's see if this lets us drop down to the 5-minute time frame though. Okay, boom. This lets us drop down to, what about the 3-minute? Okay, this doesn't let us drop down to the 3-minute time frame, but I think the 5-minute time frame should be enough. So we want to start this on a Monday. So let's skip ahead to Monday, the open. Boom, this is Monday. Before I have us backtest this random day that we just put up on the screen to really see if the session liquidity model truly does work, the very first thing that we need to do is we need to go check out our news for the week. So if we go over to, where was it? We picked September 9th, 2024. September 9th, 2024, clear. September 10th, clear. Ooh, CPI September 11th, September 12th, PPI. Okay, I normally don't trade CPI and PPI, and I want to give y'all a full week. So low key, what about 16th, 17th, FOMC? Maybe we just skip Wednesday. Thursday is good. Friday is good. Okay, let's move on to the next week actually. This is September. I think gold is at all-time highs. Let's do some technical analysis. Gold is currently at all-time highs, but what does that mean? That gold is technically currently bullish. Let's look at the 16th. Do we have any news? We have 8:30 medium folder, orange folder news. We're not really worried about that. Answer these 3 questions. Where is price coming from? Price just swept some liquidity. Where could we potentially go? I don't know, maybe all-time highs. Where are we currently at? We're rejecting from the sweep of this liquidity. Let's drop down to the 5-minute time frame. And let's see. Okay, on the 5-minute time frame, what do we have here? Look, London session did our strategy. London session came, swept out Asia session high and dumped. So now, New York session is about to open. London session has already swept out Asia session low and is reversing back to the upside. So how can I catch this trade? Well, if price just maybe sweeps this low, price maybe sweeps this low, and then give us something like that, that's a potential entry. Or I actually don't want price to sweep out London lows all the way here. London low should be the protected low that it puts in to continue the high. This is already a liquidity sweep, guys. Look at it. High, low, high, sweep, to then potentially continue higher. From what I'm seeing, let's check this TT indicator. Okay, nothing. There's our sweep. There's a better sweep. Boom. We have a sweep of liquidity while tapping into our low. This looks good. Let me check on the 3-minute time frame. I'm sure on the 3-minute time frame there's some type of inversion here, but it's fine. We'll use this inversion then. It's 5-minute inversion here. That gets closed above, we'll take a buy. Oh shit. It left without us. I'm sure there was some type of 3-minute gap there. It doesn't let me check on the 3-minute time frame. Where do we target? Next session level, but first TP always at a 1-to-1. First TP always, always, always at a 1-to-1. Second TP can be these highs. And then third TP can be these session levels here. Boom. It tagged us in. TP1. Boom. TP2 and TP3. And then it completely, oh my goodness, look where it completely reversed from, to the tick. Asia session high to the tick. So if anything, you could have really caught a reverse. The session liquidity model, man. You could have easily caught a reversal trade for it to go lower, but that would have been, yeah. This is smooth. Did y'all see how we just did the analysis from literally the 1-hour time frame all the way back down to the 5-minute time frame? Let's look again. Let's move on to Tuesday. I only take one trade a day, so win or lose, we took a first dub. Cool. Monday we took a dub. Let's look over on Tuesday. Skip all this shit. What's price currently doing in this all-time highs market? Yeah, we are trending higher, but right now it looks like we're accumulating. And we low-key might have just broken out. Or this could be manipulation to then distribute. So what will really determine where we're going is genuinely this hourly FEG. How price reacts in this hourly FEG. How price reacts in this hourly FEG will determine whether price wants to actually continue going higher, or if price wants to continue going lower, because we are rejecting from this hourly FEG too. So we're bouncing between two hourly FEGs. Boom, tricky. Okay, let's drop down to the 15-minute time frame. On the 15-minute time frame, what's currently going on? London session has swept Asia session high. What happened yesterday? London session swept Asia session high. We tapped it to a tick and then we dumped. Okay, now London session has swept Asia session high again. It looks like London session trades are killing it because the session liquidity model is so clean. It's sweeping and it's dumping. What's happened today? We've tapped into this 1-hour gap and we're rejecting higher. So we need more information. Look at us rejecting this. We're completely rejecting this on Tuesday. We're completely rejecting this. Okay, so it looks like we're bearish. This is that 1-hour low. Oh, perfect, perfect, perfect. Look at this. We have equal lows down below. So it looks like we're bearish on the day. To target these equal lows. Guys, don't take this. Don't take this. Don't take this. I know it's the session liquidity model, but it's not aligned with our bias at all. London session has swept out Asia session high. We've put in a new low. We came back into this 1-hour gap that was supposed to determine whether we would be bullish or be bearish. And then price immediately respected this 1-hour gap, disrespected this 1-hour gap, and put in a new low. What? Don't take this. I'm looking to short this. So what are we waiting for now? If this 5-minute gap can inverse back to the downside, this would be a good short. Session liquidity model. This Asia session low. We're closing back below Asia session low, and we can target this relatively equal lows that's aligned with London session low here. Nothing yet. Nothing at all. Boom, sweep of liquidity, perfect. Boom, is this a closure? Ah, almost. So you got to be patient. See, you would have been stopped out. What time is it? This trade's taking too long. 9:30. Guys, you can take an inverse here, but it's so much riskier. Why is it risky? It's risky because this is the level that we need price to clear. Oh, price has cleared our level. Okay, what can we do? We're in our short position here. Now, the safest place to put your stop loss is all the way up here. Would I recommend that you do that? Absolutely not. Because now your stop loss is the size of, it's hideous. You can put your stop loss somewhere here to where by the time price reaches here, it has to close back above this FEG. And then you can just target these relative equal lows. We're tagged in, drawdown, more drawdown. Boom, TP. Clean, guys, we're 2 for 2 on the week. Random week. Random week. Well, technically it wasn't random. We won it the last week and then we picked this week after looking at news or whatever. But yeah, see how I avoided these longs? Why? Because the bearish sentiment played out. We came back up, we re-swept these highs. We could have gotten in from here, but that's a risky short setup because why? This is the level that we want price to clear. Price cleared the level, closed back beneath the level. We get into our short position, put our stop loss somewhere where price is invalidated. More than likely, we're going to continue going long and then waited for price to dump. Simple, just like that. Let's check out Wednesday. Wednesday is FOMC. I don't usually trade on those days. I don't trade CPI, PPI, or FOMC. So we're not gonna place a trade, but let's just check it out. So technically we're 2 for 2 on the week. 1 trade a day keeps the 9 to 5 away. We're 2 for 2 on the week and we have not traded on Wednesday. We won't trade on Wednesday, but we'll check it out. Let's see if price does what we want. Okay, price looks like we are back in bullish territory. Why? We've swept out these lows. Boom, we've swept out these lows. Price continued higher, then price came back down to sweep out these lows again to continue higher. It looks like we're back in bullish territory. So we can expect bullish momentum. Let's just play this out. Maybe we should go higher here, maybe. Yeah? Whoa, okay, okay. I guess not. This looks like bearish momentum to me. Wow, FOMC cooked the market. This is why I don't trade it. See, I would have been bullish. I probably would have tried to take these longs and got cooked. It's 11:40, I'll be done trading. I probably would have taken an L on Wednesday if I traded. Because I'll try to long this here, because I was bullish. Now we're leaving equal lows or whatever. Do we end up being bullish? Oh, FOMC now makes us bullish. Makes sense. Makes sense. That's why you don't trade these days, because your bias is right, but it will wait till FOMC, CPI, PPI, one of those heavy news days to actually align with your bias. So no, thank you. But guys, if you're finding this walkthrough valuable so far, let me know by leaving a like to this video and make sure to subscribe to the channel because I'm doing lives like this almost daily. So let's look over at Thursday. Thursday, we have unemployment claims at 8:30. So guys, what's going on so far? We won our trade Monday. We won our trade Tuesday. We didn't place a trade Wednesday, but if you did and you broke your rules, you lost Wednesday. Let's look at Thursday. We start trading Thursday at 7. Let's look at what price action has for us on Thursday. Price looks extremely, extremely bullish to me on Thursday. We have this 1 hour gap down here. Price might maybe want to reject from. We don't know. It could. Drop down to the 5-minute time frame. We have session levels here. Oh, this is 7. Yeah, now the market's open. LOL. Boom, okay. We dumped. We've tapped the London session low. This is that 1 hour gap. Are we going to bounce here? Ooh, no bounce. We should bounce now. 15-minute this candle is really big after sweeping some liquidity. Ooh. I like that. I like this candle's close. Oh, but we just tapped the 50% mark. Okay, let's see. We get a retracement back into this, but we're closed above it. We closed beneath it. Let's see how price reacts in this 5-minute gap. I wish I could go down into a smaller time frame. Like, it won't let me go anything past the 3-minute or the 2-minute. Maybe I should have used FX replay for this video. Ooh, no, that's not good. That's not good. We need this to inverse back to the upside. Okay. Thursday, if you had taken this initial trade, that would have definitely been a stop out. I'm still bullish on this. These are data highs. This is FOMC highs. I'm still bullish on Thursday. If it clears this level, that's good. Ooh, what's going on? There we go. Shit, man. Okay, longs. Stop loss here. Let's see if it can get to at least these highs and then all-time highs, but first a 1-to-1. Always go for a 1-to-1, man. Trust me, you thank me later. Can we get this trade without getting stopped out? TP1, TP2. Are we serious? Gold. TP3. This is holding into Asia session. You probably would have closed somewhere at TP1 or TP2, but that's Thursday. So Thursday's iffy. I don't know what y'all want to count it. If you stayed patient and you waited, because what's it called? We did close above our level, but I used the fib a lot. So then I'm checking on the fib to see if we're clearing the 50% mark. We're not clearing the 50% mark. If anything, we're rejecting straight from the 50% mark. That would make me very hesitant because I use limits to set my order. I used to market order, but I use limits. So my limit will be back on top of this level with stop loss beneath the low. So before my limit gets hit, I would be checking to see, okay, did we clear the 50% mark? Is this actually truly a reversal? And it didn't look like a reversal. It looked like price was just rejecting the 50%. So I wanted to see another clearance of this level here, and we got it on this candle. So you get in long here, stop loss beneath the low, and maybe break even here, but I usually go break even at a 1-to-1. Let price do its thing, boom. TP gets hits on Thursday. But, so where are we at? Monday, you won. Tuesday, you won. Wednesday, you didn't trade. Thursday, you either lost or you won, whichever one it was. If you stayed patient today on Thursday, you won. If you didn't stay patient and you took this very first trade, you lost. Regardless, you're still up on the week. Let's check Friday. Friday, FOMC Waller speaks 11:30 a.m., so we're not worried about that. Boom, let's go over to Friday. Friday should be easy, cakewalk. Let's see. I mean, we look bullish to me, but we look a little too bullish. Look at this candle. Look at this hourly candle. We failed to close back above this candle. When you're trading all-time highs, this stuff's very, very important. Look at this. Equal highs with London session high. Okay, I'm not going to lie. This actually looks like a pretty easy short to me. Why am I shorting? I know I sound crazy or something like that, but why am I shorting? We look overly extended. But if you short this, not going to lie, take a 1-to-1 max. Because if you wanted to long, your levels are all the way down here. Look at this. Your levels are all the way down here. It's not, I don't think it's going to go all the way down there. It will come to this low. It might come to this low, maybe this low, but to go all the way down here, that's low-key a stretch. So this is counter trend trading. Get a sweep of our liquidity. Yeah, we got it. We want an inversion. Oh, no inversion. Yeah, okay, so it's bullish. I really thought this would. Oh, maybe. Yeah, I really thought this would like dump. Okay, these two fair value gaps. Oh, if this inverses, this is a short, guys. If this inverses and then make sure it closes beneath London high, this is a short. Okay, it's inversed, but it didn't close beneath London high. Boom, I'll take this one right here. This is a short. This is a short. This is a short, guys. Because we're extremely bullish, my stops will have to be that wide. I mean, is this safe to put it here? Yeah, let's put the stops here. Okay, maybe give it room to maybe come re-sweep these highs, because this looks a lot like a liquidity sweep, but it's the model. It closed beneath the level and beneath our low. It's the model. Where's our 1-to-1? Boom, 1-to-1 is right here. Second TP can be right here. Or you can make this your first TP and always just go break even at a 1-to-1. But every single time a 1-to-1 occurs, you were right. You should never lose on that trade anymore. Once a 1-to-1 hits, it's either you secured profits or you went break even, but you should never lose after you get secured a 1-to-1. Your win rates will be extremely high. Boom, 1-to-1 hits. Okay, boom, we go break even. Boom, TP1 hits. Oh shit. TP1 hits. TP2. Okay, we're safe. We're safe. Boom, TP2. TP3. Ah, you got edged. Wow, holy edge. Holy edge on TP3, but if you have any proper risk management, there's no way you let this come all the way back up to break even. More than likely you secure profits after you saw it reject and you probably closed up here or something like that back at TP2. Guys, session liquidity model. I just showed it to y'all on a completely random week. So that's the session liquidity model, live from start to finish. And by watching me actually run it this morning, instead of just reading about it somewhere, you've already seen more of how this system really works than most traders will actually figure out in months. Now, seeing it work is only going to put money in your pocket if you understand why it works. So you can sit down tomorrow and read the chart for yourself instead of relying on me. And if you want to do that, I have a free trading course here on YouTube where I squeezed 3 years of trading into under 1 hour and a half. It is basically all the theory behind everything that you just watched laid out step by step so you can actually run this stuff on your own. So I'll leave that video on the screen right now, but if not, I'll leave a link to it in the description as well. Thanks for watching, and I'll see y'all boys in the next one. Poof.